Okay, so our class is today. Good evening, I remember. Today we will today the topic is about the principle of Dow Theory. My name is Jessie. So today you will learn the principle of Dow Theory, then how to apply this theory to in our homely software. Okay, so let's see this one. This is the Charles Henry Dow. This theory is respected by most people as long as they invested in the stock market. So many investors heard these persons before and heard of this theory. Okay, so let's continue. Let's see today the main contents. We will talk about the market outlook and the basic viewpoint of Dow theory. This is the basic viewpoint of technical analysis. Okay. So let's see the market outlook. This is the chart. So we saw this chart before because we can use Fibonacci to judge where is the turning point. Okay, so let's read the chart first. How to apply this chart? So firstly, we should find the key points. Okay, the key points is the low point or high point or both can. Then we can click T Fibonacci. Then we just click this candlestick because we know that this is the low is the price at the key candlestick, right? Because we should see the low price of the candlestick. So this is the low price, low point. Then we can click this one. Then the Fibonacci will appear, right? So if you see the price just touch the worker line, which means this is the turning point. Okay, so we move to here. We can see only 18 trading days later, the market will change the trend. So we don't know whether the trend will continue to go up or go down, but this is the turning point. So you should know after 18 trading days, this is the turning point of STI index. Okay, so you should know this one. The next one, we can see the monthly chart of STI index. So this one, I use KDJ indicator to judge the periodical high and the low point. Because we know that KDJ is the first indicator, so we can use KDJ to judge the periodical high point and low point. If you see, we can see there are three lines. The white line is the J line, and the red line is K line, and the yellow line is D line. Okay, but the J line is more important for us. If we see J line upward turning, which means this is the periodical low point. Then if we see the J line downward turning, which means this is the periodical high point. Okay, so if we see the J line up, it's good for short term because KDJ is fast. So this is only for short term trading. Okay, so if you see the J line is between -20 to 20, which means this is the oversold area, and this is the overbought area when the KDJ is between 80 to 100. Okay, 80 to 120. So this is the KDJ. Then we can see if the J line golden cross, the upward cross, the K line and D line. This is the buy point for short term. Okay, so we can see this is the monthly chart. Here we can see the J line upward cross the K line and the D line. This is the buy point. So this is another buy point, the buy point. Okay, so we can see the recent price. This is the J line golden upward cross the K line and the D line. So here is the buy point. Okay, so if we use KDJ, we can catch the rebound. So how to do that? You just see whether the J line upward cross or downward cross. If you see the J line downward cross the K line and the D line, which means this is the periodical high point, and you'd better sell first for short-term rebound. Okay, so let's see the STI index. We should see the monthly chart. Why we see monthly chart first? Because long term first, short term next. Okay, so this is the monthly chart. Then we can see use KDJ, the J line. Then we see here is the low point, periodical low point. The time is 2016 March 31st. Okay, so this is the buy point because this is a monthly chart, tells you that here is the good buy point for short term. So here, if you buy, now you keep or not, you still can keep because there's no downward cross. So if you see next day, the J line downward cross the K line and the D line, you'd better sell for short term. Okay, so this is the monthly chart. We also can see the individual stocks. So let's see this is the active stocks, right? Okay, then we can see this is the mermaid. Firstly, this is the monthly chart. Okay, so where is the good buy point? We can see here, the J line is between -20 to 20. Okay, so J line upward cross the K line and D line. So here is the buy point. Okay, so here the buy point. Now you keep or not? Yes, you can keep because this is your buy price. The buy price is 0.101. Now it's already 0.215. Okay, so we can see the J line upward turning or downward turning. Downward turning. So you should know that this is for short-term correction. Okay, so let's see another stock. This stock is also strong. So we can see this stock. This stock is strong or not? Yes, it's quite strong, right? Because this is the monthly chart. So where is the good buy point? Here, can we buy or not? Yes. So here, can we get buy or not? Still can buy, right? So if you buy here or here also can, because this is the periodical low point. Okay. So you can use KDJ to judge this information, and you also can use weekly chart or daily chart. Okay, so let's see the daily chart. You can set the signals. So we can click the probability, change the KDJ -20 to 20. Then we can click OK. Then we can see the blue signal appears, right? Okay, so let's do this one first. Okay, so this is the KDJ, this is the buy point, right? Where is the sell point? Here is the sell point. Okay, so if you had these stocks, which point is the good sell point? Here is the buy point, right? So the buy price is 0.535. This is the buy point. So here is the sell point. The sell point 0.86, right? So if you use this function, you can buy low, sell high, because this function is fast indicator. So if you use this one, you can judge the good trend. Okay? So we can see here is the buy point. Here is the sell point. Then here is the buy point. Here is the sell point. Then you can catch good rebound. Okay, so this is the stocks. Let's see the STI index. So we can see the STI index for short term. Now is downward cross, right? So which means this is the short term correction. Okay, so where is the blue signal? This is the blue signal, right? If you see the blue signal disappear, here is the good buy point. Okay, so this is the STI index, the daily chart. Use KDJ to judge the periodical high point and low point for our monthly chart or daily chart. But for daily chart, it's it is too fast. So the monthly chart maybe is better, or weekly chart, both can. Okay, so this is the market. Let's see the weekly chart. This is the weekly chart. So we know this function, right? This function is called Trips distribution. Why we can use Trips distribution to judge where is the resistance and where is the support. So why I use weekly chart? Because we can see this is the high point, right? This is another high point. So we can see here, high point has resistance or support for the future price. Then we can see here is the resistance. So we can see the price. The price upward break out the resistance or not? Not yet, right? So here, this is the weekly chart. The price still not create a new high, okay? So which means this is the resistance. So we should know if you do some short-term rebound, here this is the short-term resistance. You'd better sell for short-term, okay? So this is the big volume, big chips here. This is the big strong support, okay? So if the price touch here or here, also have the support, okay? So this is the weekly chart. Let's see the daily chart. The daily chart, this function is called Deviation Expert. Deviation Expert. So we can see the red column stands for the bank money flow. Green column means the bank money outflow. Okay. So we can see this function also can help us to judge where is the top deviation or bottom deviation. If we see the price go down and the deviation expert, the low point is higher, which means this is the bottom deviation. So if you see the price and if you see this is the bottom deviation, which means the market will go up. Then we can see here, then this is the normal situation. So we see here, the price go up, but the deviation expert go down, which means here you should pay attention to the risk. Then we can see here again. So the price, you see, the price is up, but the deviation expert is down. What's that meaning? This is the top deviation. You should pay more attention to the short-term risk. Then we can see here, just now we saw the weekly chart, just touch the resistance of the previous high point. So we can see here is another resistance for daily chart. So we see weekly chart just touch the resistance. Daily chart also touch the resistance. So whether can upward breakout or not, we are not sure. We are not sure yet. Then if the price can break out this resistance, so maybe we will continue to go up. If cannot, then there may have some short-term correction. Okay. So this is the STI index. So let's see some individual stocks. Then we can, because we see the market first, then we analyze the stocks, active stocks ahead. Next, so we can, this is the market and outlook. Then we can see some active stocks. Then we judge which one is better and what should we do for our individual stocks. Okay, so let's right-click the high volume. The first one is this stock. This stock is DISA. Today, one member asked me whether this stock we should stop loss or not because she bought around 0.031 around this. So after bought, the price dropped. Okay, so she asked me whether I should hold or stop loss. But you should know, this is not the good buy point, okay? Because this is the still blue candlestick, right? So if you see the blue signal disappear, maybe you have another chance to buy again, okay? So we can see here is the buy point. Now you can wait and see. Once the blue signal disappear, maybe you can consider to get in again because we know that the medium-term trend is still up, okay? So this is the first active stock. Let's see the next one. This one is Noble stock, okay? So recently the Noble is still red band, which means the medium term we can hold or not. Still can hold, okay? You just keep it. Then we can see next one. This one is International Hairspray. This one is good or not? It's good, right? Because for the medium-term trend, it's still up. Then we can see here. Where is the good buy point? Just now we learned how to use KDJ to judge. So we can see here, blue candlestick appears. Then this day, can we get in or not? So we see here, the J line is between -20 to 20 and the upward cross K and the D line. So buy or not? Yes, it is the good buy point. Okay, then we can buy. So how about here? Can we buy or not? Buy or not? For the chart, still can buy. Okay, then we can, because this is the fast indicator. If you buy, you only for short term. Okay, so here is the good buy point. Then you can see, if you buy at this price, you can earn a lot of profit. Okay, so let's see this one, ISRA. ISRA is good or not? Not good, right? So you see here, this is the downward close, right? So what should we do? Sell quickly, okay? So we see here, the trend is good or not? Not good. So whether can buy or not? No, because it is still blue candlestick. So we see the J lines between -20 to 20, which means now it's the oversold area. But we cannot get in because it is still blue signal. So we should wait the blue signal disappear. Then we could consider do some short-term rebound. Okay. So let's see this one. This one is good or not? Golden agree. Today sharply down. Okay. So we can see here, this is the support, right? And if we see the blue candlestick disappear, maybe we can do some short-term rebound. So this is some active stocks. So you can use some signals to judge whether it is good buy point or not. Because now the market is suitable for medium short-term trend. So if we do some medium short-term trend, we can use some indicators to judge the buy and the sell point. Okay. So let's see the next one. Now we talk about the Dow Theory principles. Because we know that there are 6 principles of Dow Theory. So the first one, the price discounts everything. The next one, the market has 3 trends. The third one, trends has 3 phases. The fourth one, the averages must conform each other. The next one, volume must conform the trend. The last one, a trend is assumed to be in effect until it has given definite signals that it has reversal. Okay, so later I will explain to you the details of these principles so you can listen carefully. So the first one is the price discounts everything. Price discounts everything. What's that meaning? All new information that can be known as has already been factored in. Therefore, all that news has been discounted. So maybe you can see the price dropped. So let's see the ISRA. We can see here, the price suddenly halt and sharply down, right? What's that? Why? Because the company had some bad news. So this information will reacted in the chart. Okay, so we see here the price had some dropped and this is the gap. Okay, so the only remaining influence on the stock price is human emotion, because if our emotion will in fact on the stock price. The first one, the price reflects the market trend. The next one, index discount a variety of new and predictable factors which can affect the stock supply or demand. So therefore, the investment philosophy is index first, stock next. So if you want to judge individual stocks, you should see the market first, then you can check your individual stocks. So the index first, stock next. So what's that meaning? We can use chart comparison to judge whether this stock is strong or not. Like this one. This is the ISRA. So we can see this first chart is STI index. The second chart is individual stocks. So we should know whether the stock is strong or not. We can compare to compare with the index. So we can judge whether the stock is good or not. So we can see this stock. This is the market. The market we can see here. The high point is higher, right? But the individual stocks, the high point is lower. So this stock is strong or not? Not strong, because there are three kinds of stocks in the market. The first one is strong stocks, because this one the trend is stronger than index. The next one is the normal stock, like the blue chips. If the market down, the price down. If the market up, the price up. So this is the normal stocks. The third one is about the weak stocks. If you see the market up, but the stock is down, so this is the weak stocks. We should catch strong stocks or normal stocks. We cannot hold weak stocks. So let's see this one. The market high point is higher, but the individual stocks, the high point is lower, which means the stock is weaker than index. We cannot catch this stock because it is not good, okay? So we can see the next one. Why this stock is strong? We should know the reason. So we can see here. This is the index. So we see the index. The low point is lower, but for the individual stock, the low point is higher. So this stock, therefore, the stock is stronger than index. So we should catch these stocks because it is stronger, right? So we should hold strong stocks. So this one is good, okay? Then we can see why this one is still good. Because we can see the market down, but the price is in sideways, which means the stock, individual stock is stronger than index, okay? So you should know how to judge. But we can see now whether it's good or not. So we can see here, this is the market, right? The market cannot create a new high. So this stock still cannot create a new high. For current price, it's stronger than index or not? It's the trend, the direction is the same as the STI index. So we cannot judge whether this stock is stronger. Then we can see another one. Let's see this stock, Alliance, okay? So why this stock is strong? How to judge? So we see here, the market down, the price down or not? It's up, right? So here, stronger than index. So we should hold these stocks. Okay, then we can see here, the market, the low point is lower, but the individual stocks, low point is higher. Which what's that meaning? This stock is strong stock, so we should catch this stock, okay? This is good one. So let's see another one. So let's see this stock is good or not. Then we can judge whether it's good or not. So we can see here, the market, the high price is higher. This stock, the low price is higher, and the individual stocks, the low price is higher. So the direction is the same as individual stocks, right? Okay. So let's see another one. I forgot this name. So let's continue. So this is the price discounts everything, okay? So we should know the index first, stock next. Then we can see the second principle, the three trends: primary trend, secondary trend, and mirror trend. The primary trend is the major trends, extensive up or down movements. usually 1 year or more. So if you want to do primary trend, you should hold at least 1 year. Okay, usually result in a move up or down of 20% or more. Okay, so this is the primary trend. What's that meaning, the primary trend? Okay, if you want to judge the trend first, see primary trend ahead. So let's see the STI index. So this is the STI index. So whether it's good or not, then we can see this is the STI index, right? So whether the primary trend is up or down, then we can see here. This is the low price, right? Because at this price, the market starts to go up. So this is the low price. The date is 2016, the January 25th. Then till now, at least 1 year, right? At least 1 year. So this is the primary trend is up or down. Primary trend is up. Okay. So let's see the monthly chart. Let's see the monthly chart first. So this is the market start to go down, right? So this is the point. So we can see the simple statistic. So we can see here. This is the trading period is 17 months. 17 months, and this is the volatility is 57%. So you can see here, this is not good. Then we can see here, the price start to drop, right? So here we can see the trading period is 12 months. So the volatility is 16.9%. This is another one. So we can see here, the price drop here. Then we can see the trading period is around 12 months, and the volatility is around 25. But what's that meaning? This is the primary trend or mirror trend. So we should see whether the trading period is at least 1 year or not. Below 1 year, this is not a primary trend. Okay, so you should see this first. Then usually result in a move up or down of 20% or more. So you should know this is a major trend. If you want to judge individual stocks, you also should see the primary trend ahead. Okay, so we can see this is the monthly chart. Then we can see the daily chart. So you should know whether this stock is the primary trend is up, is good or not. So we can see this is the low point, right? So from this low point till now, the primary trend is uptrend or downtrend? It's uptrend, okay? So the next one is secondary trend. The first one, reactions during a primary trend. Short term, usually weeks or a few months. So if you want to do medium term, you can judge the secondary trend because the period is usually weeks or a few months. Okay, this last one constitute 30 to 100% of the previous move in the primary trend. Okay, so what's that meaning? So because we should know that if the trend is this is the primary trend. This is the primary trend, right? Okay, so here to here, at least 1 year. At least 1 year. Okay, so this is the primary trend. What is the secondary trend? So we can see here and here. This is the secondary trend, and usually weeks or a few months. So we can see if the market went down, and you should know that the 30 to 100% of the previous move in the primary trend. Okay, so you should know that because most of us learned Dow learned one theory before. This theory is like this. This is the wave theory. This is the wave 1, right? This is the wave 2. Okay, so there are two situations. So we can see here, if the price drop here, this is the starting point. So if the price drop around the previous low point, so what's that? So we should know this wave theory is satisfied or not. We know that the wave 3 is the big chance from earning profit, right? This is the wave 2. So the market will have wave 3 again or not?
More than 50%.
Have, because this is the low point, right? But never hits a new low. So if you see the price just touch here and didn't create new low, so here they have wave 3. Okay, so here is the good buy point. And another one is like this. This is the first wave 1, and this is the wave 2. Maybe half of the wave 1 or 1/3. So here also can, then price wave 3, right? And another situation is like this. This is the wave 1 and the wave 2. But you can see the wave 2, the price hits a new low. So you should know that there are no wave 3, okay? So this is not a good buy point. So here is the buy point. Here also the buy point, okay? So this is the secondary trend. The next one is minor trend. This minor trend is more moves. The days or up to 2 to 3 weeks can be 30 to 100% of the intermediate level more. Okay, so this is the mirror trend. What is the mirror trend? Mirror trend is around several days or up to 2 to 3 weeks, below 3 weeks. So this is the mirror trend. And if you see the mirror trend, you only can do some short-term rebound, short-term, okay? So let's see one stock. I forgot the name, so we should. Because last time I pay attention one stock. I just forgot the name. Okay, so let's analyze one by one. This one no need to care, okay, because the candlestick is not good. So we can see this one also no. So let's see this this price, okay. So we can know that this is the wave 1, okay. We can consider this period is the wave 1, okay. So if you see here, the price touch here then go up again. This is the wave 3 or not? Yes. So this is the wave 3. So here is the good buy point, okay. So this is the first one. Then we can see this one. Today this stock sharply down, okay. So we can see this stock. We can consider here. This is the wave 1, right? And this is the wave 2. Because we can see never create a new high, right? So the wave 3, wave 4, and the wave 5. So down again, okay? So then we can see next one. Let's see this stock. It's how to judge. So we can see here, this is the wave 1. We can consider this is the wave 1. But this is the wave 2 or not? No, because it's a new low, right? So we should start again, new again. Here is the wave 1, wave 2, then wave 3, wave 4, and wave 5. Because we can see from here to here, only several months. So this is the primary trend or secondary trend. This is the secondary trend. So here is the short correction. So if you judge this is the secondary trend, so we can see the correction is mirror trend. So around several days, right? So if the price drops several days, then the price will continue to go up. Okay. So let's see the next one. This is the E-zone. So let's see this stock. Capital rate is good or not? Recently very strong because just now I saw news. The good news for the housing price. Okay. So let's see this one. This is the wave 1, okay or not? Yes. This is the wave 2, the wave 3. Okay. Then maybe the price will have wave 4, but we're not sure or not. Not sure yet. So let's see the alliance. Okay. So this is the wave 1. Can we consider this wave 1 or not? Yes. Then this is the wave 2, wave 3, wave 4, and the wave 5. Also can, right? So this is the stocks. Then how to judge it? So you can judge the mirror trend. Okay. So let's see this one, QT. QT is good or not? Then we can see the primary trend. The primary trend is downtrend or uptrend. Obviously, it is downtrend because we can see this is the high point, right? And till now, several months, this is the secondary trend, is downtrend. Okay. So if you see the price had some rebound, it's the mirror trend. So will last around several days. Then we'll continue to go down. Okay. So let's see this one. Can we consider that this is the wave 1? Yes. But we don't know wave 2 is confirmed or not, right? Because if the price touch here again, then go up. This is the wave 3. Or the price drop here, then continue to go up. This is the wave 3. So this one, you can consider this is the wave 1. But whether the wave 3 will appear or not, we are not sure. So we should see the low point. The correction point is will hit a new low or not. If we are not hit a new low, so the price will continue to go up. Okay. So this is this stock. So let's see this one, Thai bridge. Recently, Thai bridge had strong rebound. Okay. So recently the market has had a strong rebound. So we can see this one. Can we consider that this is the wave 1? Yes. Then maybe the half wave 2, then wave 3 again. So you can use this one to judge whether it's good or not. So this is the mirror trend. It's small moves, days or up to 2 to 3 weeks. Can be 30 to 100% of the intermediate level move. So let's see this one. We can use this one to judge the primary trend, secondary trend, and the mirror trend. Okay. So this is the periodical comparison. Okay. So this is the monthly chart. This is the same stock. The monthly chart, weekly chart, and the daily chart. Okay. So we can see the monthly chart. If you see the monthly chart, it's red circle. The daily chart, the weekly chart is red circle. So when you see the daily chart from the white circle to the red circle, here is the good buy point. Okay, because the primary trend is good, secondary trend is good. So mirror trend, the buy point appears, you can consider buy. Okay. So let's see another stocks. Let's see this one. This is the monthly chart. So the monthly chart is good or not? Yes, because this is a red circle, right? The weekly chart is also red circle. So when you see the chart, white circle turn to the red circle is the buy point. So let's see this chart. I can show you. Firstly, we should click the chart period comparison. Okay. So this is the click main chart. Then find the red and white circle. Then we should click here. This is the monthly chart. So we can see here. This is the monthly chart is red, then the weekly chart is red circle. Daily chart, white turn to red circle, buy or not? Yes, but here, can we buy or not? Also can. How about here? Because this is the, we can see here. This is the monthly chart. Monthly chart is red circle, but weekly chart is white circle, red circle, white circle. Even if we see the daily chart, white circle turn to the red circle, we cannot get in, okay? Because weekly chart is more important. So if you see the weekly chart is white circle, you cannot buy, okay? So let's see another stock. Let's see this one, strong stock. So why we can see here? This is the monthly chart, it's red circle, right? Weekly chart is red circle. The daily chart, white circle turn to the red circle, buy or not? Yes, here is the good buy point, okay? So we can see the white circle appears. What's that meaning? Which means the mirror trend is down, okay? So they have some correction, maybe several days at below 3 weeks, okay? But for the primary trend and secondary trend, it's still up, okay? So let's see the next one. This is Yangzijiang, okay? So firstly, let's see this one. Here, the monthly chart is red circle, right? The weekly chart is red circle. The daily chart is red circle. What should we do? What is our trading strategy? Generally speaking, we should hold, okay? We should hold first because the primary trend, secondary trend, and mirror trend still are all good, so we can hold, okay? So you can use this function to judge whether this is good or not, okay? So let's continue. This is you can use this one to judge the primary trend, secondary trend, mirror trend, and decide we should do short-term rebound or not, okay? If you see the monthly chart is not good, weekly chart is not good, so if you see the daily chart has buy signal, you'd better not buy, okay? So this is this one. The next one is trends have 3 phases. The first one is accumulation. The second one is public participation. The last one is distribution, okay? If you see the trends, they have 3 ways. The first way is accumulation. What is the accumulation? So let's see the chart, okay? So because we can see some stocks go down, then sideways. If you see this is the sideways area, this is the first phase. First phase is about the accumulation, okay? So the price starts to go up. This is the second phase, public participation. Then we can see the next one, the price cannot create a new high and sideways again. This is the distribution, the last phase. It's about the distribution. So the price starts to go down, okay? Then the 3 phases of primary downtrend. At the end of the bull market, the panic stage and the gentle decline. There are 3 kinds of investors: foresight, hindsight, and unconscious. So this is the trends have 3 phases, okay? So let's see this one. What is the accumulation and what is the public participation? Then the distribution. So we can see the price drop. Then the price didn't hit a new low and start to sideways. So this is the open position. This is the accumulation, okay? So then the price starts to go up. This is the climbing, okay? Then we can see here, the price go down again. But just now I already taught you. This is the wave 1, right? So if you see the second wave, wave 2, then the low point is not hit a new low. So here is the wave 2. Then wave 3, this is the pull up. Then whipsaw, this is the short-term correction. So this is the wave 1, wave 2, wave 3, wave 4. And the last basis is profit taking. This is the distribution, okay? So you should know at the top, the price, the bankers start to take profit, okay, then they will go in outflow. So let's see one stock. Let's see this one. This one is typical. Okay, so let's see this one. Can we see this is the wave 1, the wave 2, wave 3, wave 4, and the wave 5. Okay, so this is the primary trend. Then we can see here the A, B, C. Then the price starts to sideways again. So let's see this one. The price drop right, and now sideways as a triangle pattern. So if you see the price never hit a new low, what's that mean? This is a accumulation. So here is the accumulation, okay? So you should know that maybe the price will go up. So you should know, if the price go up, maybe you can catch some good opportunity, but you should know how to read the signal of banker operation, okay? So this is this one. So you should know the open position, typing, price, put up, whipsaw, and profit taking. So how the banker, what is the banker operation? So you can use this one to judge. So you should remember the 3 phases include accumulation, public participation, and distribution. Okay. So let's see this one. We know that one of our functions is called homely rainbow, right? You can use homely rainbow lines to judge whether it's good or not. Okay, so you can see you can use this function to judge the trend, the long-term trend, medium-term trend, and the short-term trend, and how the banker accumulation and the profit taking and the publication. So we can see the homely rainbow. We know that there are some lines, right? Different color lines. The white and blue lines stand for long-term trend, and the yellow lines stand for medium short-term trend. Red lines stand for short-term trend. Okay. So how the banker accumulation? How the banker accumulation? If you see all the lines, if you see the yellow lines gathering, which means here is the accumulation. Okay. If the price can upward break out the yellow line, which means the price will go up. But if you see the yellow line gathering, but the price go down, you cannot get in. Okay. So this is the accumulation. Then we can see all the lines, all the rainbow lines are all go up. This is the participation. Okay. Publication. Then here, the price drop, but here is the short term or medium term. So we can judge by the homely rainbow lines. We can see here the white lines and the blue lines stand for short term, for long term. So for this stock, the long term is good or not? It's strong, right? So why the price had some correction? Because the primary trend is up, but here is the secondary trend. Okay, so we can see the red line go down, yellow line go down. Okay, so this means the short term is correction. Okay, then we can see the red line and the yellow line go up again, which means the price start to go up again, start to rise again. So we still can buy or can keep. Okay, so let's see some stocks. So let's see this stock. We can click homely rainbow. Then we can see the homely rainbow lines. Okay, so firstly, let's see the white line. The white line is up or down? Still up, right? Because the white line has the long-term support for the stock price. Then we can see here, this is the white line. And the yellow, how about the blue lines? The blue line go down or go up? The blue line is down. What's that meaning? For the medium long term, it's not good. Okay, so we can see here. let's see this period. The yellow line gathering, right? What's that meaning? This is the accumulation, okay? So if you see the yellow line go up again, which means this is the publication, then we can see here. This is the high point, right? And if the price touch the high point and cannot create a new high, this is the stop loss point or sell point, okay? So we can see now this price. Recently, we can judge the trend by comparable lines. So firstly, let's see the white line. White line is down or flat? Flat, right? Okay. Then we can see the yellow line is still down, right? So for the medium term, the trend is still downtrend. How about the red line? The red line is up or down? The red line is up. What's that meaning? For the short term, this stock is up. So if you want to trade some stocks, this stock is only for short-term rebound, okay? So maybe in the future, the yellow lines go up, which means you can do for short, you can hold for medium term, okay? So let's judge the stocks. First, let's see this stock. So we can see here, the yellow lines gathering, right? Okay, then we can see here, the yellow line start to rise. Then we can see you still can keep, but we can see here, from this period to here, several days, right? So what's that meaning? This is for the shorter correction, because we can see the white line is continue to go up. The yellow line and the blue line are all up. What's that meaning? For the medium term and the long term, the trend is still up. But why this stock had some correction? Because this stock cannot create a new high and had some correction, because we can see the yellow line go down or go up. The yellow line go down, the red line go down. So we can see the red line go down, which means this is the short-term correction, okay? So whether this stock have chance or not, yes, if the price can continue to go up again, so you can buy again. But for now, can buy or not? Wait and see, because there's no buy point. So we can see this one. So let's see this stock. So Isra, the trend is up or down. So we can see the primary trend is still down, okay? So if we want to keep some stocks for long term, this stock is not included, okay? So let's see this one, the white line down, the yellow line down, the blue line all down. So what's that meaning? It's not good, right? The trend is not good. Even if we see here, have some strong rebound, right? But you should know this is only for secondary trend or short-term trend or mirror trend, okay? Because we can see here to here only 1 month, right? So if you see the price, this stock, the primary trend is down. So if you want to, you only do for secondary trend or mirror trend. So you should know the period. The secondary trend is around a few weeks to several months. Then the short-term trend is only for several days, below 3 weeks. Okay, so we can see here, the price touch the white line cannot break out, so you should sell. So here we can see the price rebound and touch the blue line cannot break out. Touch the blue line cannot break out. Touch the blue line can break out or not? Cannot. So here you'd better sell first, okay? So if you sell here, you can avoid a big risk, okay? So you should sell quickly. So maybe some members will always think about it. So it's difficult to sell stocks, right? So if they continue to keep, we'll lose much money. So let's see the next one. Let's see this stock. Today is sharply down, so maybe there are some bad news, right? Okay, so let's see this stock. So for this stock, the trend, uptrend or downtrend, for the primary trend, the white line and the yellow line, the white line and the blue line are still up. So which means the primary trend is still up. Okay, but we can see here, the yellow line go down or go up? Go down. Yellow line go down, red line go down. So which means it's not good. But you can see today, the price just touched the support of blue lines. So you should know whether it can be supported or not. Then we can see next one. This one is good or not? Yes, it's strong, right? So we can see here, the yellow line gathering, right? Which means you can pay attention, okay? Then we can see the yellow line continue to go up again. So this stock is good or not? Yes, it's quite good. So if you buy at this price 0.034, now it's already 0.047. So you can earn some good profit. So you should see this one. So let's see activation. Firstly, let's see the primary trend. The white line is down or up? It's down, right? Which means the long term is not good. And all the lines are up. Short term, medium short term is also okay. But for the long term, it's not good. Okay? So long term is not good. You should pay attention to the short term risk. And if cannot break out, you should sell first. Okay? But this stock has chance or not? Yes, maybe have chance. Okay? Because if you see the white line go up, maybe for the chance for long term. Okay? So you can use this function to judge. So let's see this one. This stays sharply up. So how to judge it? So we can see the yellow line is gathering, which means this is the accumulation, right? But whether it's good or not, you should see. If the yellow line go up, which means this is the good, okay? Then we can see just break out the white lines. So you can use this function to judge. So let's see this. Let's see the next one. So let's see this stock. This stock is good or not? So firstly, let's see this one. There's no white line. Why? Because this is the newest stock. Okay. So we can see here, the blue line down or up? Down. Okay. So you can see the price cannot break out the blue line. But if you see the next day, the price can break out the blue line. What's that meaning? You have another chance to buy again. Okay. So why I see like that? So let's see the chart pattern. The price drop, right? And we can see now the price. What is the pattern? Triangle pattern, right? If the price can break out the triangle pattern, it's the good buy point. Okay, if cannot, we'd better wait and see. So this one we can put into our favorite. If you can check every day. If you see one day, the price upward break out the sideways area, so maybe you have chance to buy. Okay, because it is good chart pattern. So like why we see this is a good chart pattern. So we can see here, the price up, right? Then down. If we see the primary trend, this is the wave 1, okay or not? Yes, this is the wave 2. So here maybe this is the wave 3. If the price can upward break out the white line and the blue line and the triangle pattern, so the price will continue to go up or have chance to create a new high again. Okay. Blue line is here. This is the blue line. Homely rainbow line. This is the blue line. Okay. So if you see the price can upward break out the blue line, or you can draw the pattern. This is the triangle pattern. If the price can upward break out the triangle pattern, maybe it's good. Okay, so here, then we'll continue to go up again. So we can know how to judge the stocks. Okay, so this is this one. So you can how to do that. So let's see the Wilma. Wilma today still down, right? Big drop. So we can see how to that. Just now I told you that if you see this is the accumulation, this is the publication, and here is the distribution. So we can see if you see the price up, then sideways. So you should pay attention. Okay, so maybe this is the profit taking. So let's see this function. So we can see here, this is the dynamic chips. This is the red color, right? Red color, what's that meaning, the red color? This is the overbought. If you see the red line turn to the yellow line, yellow color, what's that meaning? You should sell for shorter, only for shorter, okay? So you can sell at this day. The price is 3.95, so you can avoid the big risk, right? So let's see this one, Speckman. Speckman is good or not, so we can see here. Firstly, let's see the homely rainbow line. For the homely rainbow line, the trend is good or not? Yes, it's good, but only for short term is correction or sideways. Okay, so let's see this one, it's good or not. So we can see this is the purple color of dynamic chips. Purple color, what's that meaning? What's the meaning? Overbought, oversold. So if you see the purple turn to the yellow, here is the buy point for short term. Okay, then we can see here. For this stock, we can see the yellow line still up, which means the medium short term is still okay. So if you see the white line, the yellow line, the red line can go up again, which means the price you can buy for short term. Okay. So this is some stocks. So this one is also good, right? For long term, you still can keep it. So this is the, you should know this one, indicator introduction. This is the parameter of the homely rainbow lines. White line is for the long-term trend. The parameter is 300, 320, 340, 380. And the blue lines is for long and medium term. The parameter is 150, 160, 180, 200. The yellow lines is for medium term trend. The parameter is 50, 60, 70, and 80. The green lines, assistant lines, is 40. The red lines is short-term trend. The parameter is 10, 20, and 30. Okay, so this is the indicator introduction. Firstly, the white line, you should know the parameter. So if you want to set the filter signals, filter program, you should remember the parameter. For long term, for white line, for blue line, yellow line, green line, and red line. And what the parameter is different. Okay, so this is the indicator introduction. So we can see this stock. This stock is strong, right? Hybrid. So long term is good. Okay. So this is the next one. So let's see the next one. Next principle of Dow theory. Averages must conform. The two Dow averages, transportation and the industry, must conform each other. If the two averages are not in conformation, the overall direction is suspect. So you should confirm each other. Okay, averages must confirm each other. The two, like the US stock, Dow Jones, the two Dow averages, transportation and industry, must confirm each other. So if you see the direction is deviation, you should know the trend is not good. So the next one, if the two averages are not in confirmation, the overall direction is suspect. So if you see the price, the market is up, you should know the uptrend is suspect. The price will go down again. Okay. So let's see this one. It's very important. If you want to judge whether your stock is stronger than index or not, you can use chart comparison to judge. If you see the price, the market go down, the price go up. The market go down, the price go up. This stock is stronger than index. Okay. So the next one. Index up while price down, weaker than index. So we cannot keep these stocks because this stock is weaker than index. If we keep it, we cannot make money. Okay. So even if the price, the market is good, but the stock will not help us to earn some profit. Okay. So this is this one. The next one is volume must confirm. What's that meaning? Volume must confirm. Volume must confirm the trend. Volume is assumed to move with the direction of the masses. Weak volume indicates a possible weak trend. So what's that meaning? Like this one. If you see the price up, the volume up, price up, volume up, price up, volume up, maybe it's the normal, okay? Because the volume must confirm the trend. If you see the price up but the volume down, this is not good, okay? So let's see this one. Why the trend? How to confirm? The price is up, the volume is increased. So this is the normal. So we can see this one is good because the volume confirm the trend. So the volume must confirm the trend. If you see the volume cannot confirm the trend is suspect. Okay. The volume is assumed to move with the direction of the masses, and the weak volume indicates a possible weak trend. If you see the volume is not active, you'd better wait and see. We should find some active stocks to keep. Then we can see this one. The price down, the volume decline. It is good. But if you next day you see the volume is down, but the price is down, volume is increased, you should know it's not good. Okay. So we can see the price up, the volume increase. This is good. Okay. So you can see this one is quite good. Let's see this one. Mermaid. Because you know, last time one member asked me mermaid should keep or not. He bought this stock because I told him the price is around 0.171 something, but he missed the good chance. Then he bought around 0.192 around here. So after he bought, the price went up. The price went up. So he felt very happy. He asked me, what price should I sell? Then I told, because here, just this day, I told him that if the next day, if the Monday, you should sell some position. Why? Because we can see here, the price upright, the volume increase. The price up, the volume increase, normal or not? Yes, because the volume confirm the price, right? But we can see here, the price up, the volume decline. What's that meaning? The volume and the price deviation. The volume cannot confirm the price. So I told him, you'd better sell on that day. But he insisted on keeping. Why? He thought the trend is good. But I already told him this is only for short-term rebound, short-term correction. For the medium-term trend is still good. Okay, so let's see this stock. So you can see if he sell at this price, you can see he can make more profit. So till now, earn small, okay? So let's see this one. Here, I remember this day is 10th of February. Just a Friday. Because we know the Saturday and Sunday there's no trading, right? So here, just the Friday, 20th. And he attended the seminar and asked me this stock because he bought around here. What 0.1 here, 0.192. He's bought the price he bought, 0.192. So here, earn some profit, right? He told me he can earn around $800. $800 is good, right? So he asked me whether I should hold or sell, because each time you make profit, then you're afraid of holding, because maybe you think the price will decline, right? Okay, so how to do that? So I told him, I think the price will go down, will have some correction. And I told him why I saw this, because I told him the reason. What is the reason? I told him that if you see here the price up, the volume increase, this is normal. But we see here the price up, the volume decline. So I told him that in my opinion, the stock will have some correction. So I told him you'd better sell on Monday first at open price. So Monday, you can see the price drop, right? So I already told him you should sell on Monday, but you don't need to sell full position. You can sell half position. So Monday last Monday I asked him, you sold this stock or not? He told me that he still keep it. And he said, no need to worry. I think this stock continue strong, so I will not sell. I told him that, okay, I already told you you can sell some position, but you insist on your decision, right? So I told him, it is your decision, okay? But I already told you. So continue go down. So I asked him, hold or not? He told me, still hold. The next day, rebound 2 days, right? Then go down again. So he still keep this stock, still keep it. So he told me that, what should I do now? I already told him that, I told him that I already told you how to do that, but you didn't listen to me. So you should make your decision, right? So now we can see the trend. For the medium term, for the primary trend, is good or not? Yes, it's good, but it depends on your buy price. If you buy here, because your buy price is a little high. If you buy here, you sell here, you can make more profit. But if you buy here, now you keep or not? You still can keep. It depends on your buy price, okay? So you should know that how to do that. So this is the volume and price. So volume must confirm the trend. The next one, the trends in motion. A trend is assumed to be in effect until it gives definite signal that it has reversed. Like an object in motion trends to stay in motion, then we assume a trend is still the dominant trend until we have evidence to suggest otherwise. So what's that meaning? If you see the price break out the trend line or pattern, which means or support line or resistance line, so this is the trend reversal. Okay, so let's see this one. This is the normal. So I draw the trend line. This is the downtrend line, right? Because how to draw the trend line is easy. We confirm the 2 points. There are third point touch the trend line. This is the effective trend line. Okay, so I connect this high point to this high point and this low point, then we can get the trend line. So we can see here, the price upward break out the trend line. What's that meaning? This is the reversal. Okay, reversal signal. So if you see the reversal signal appears, you'd better change your mind. You cannot wait and see. You should find some good chance to buy, to get in, okay? So we can see here, for normal this stock, uptrend or downtrend, still uptrend because I connect this low point to this low point and this high point. So we can see normal is still moves in the uptrend, okay? So if you see maybe next day, the price would break out the uptrend line. What's that meaning? You'd better sell first because the trend reversal, okay? So let's see this stock. Price break out sideways, okay? So we can see this is the resistance line, right? We can consider this area is the resistance area, okay? But we can see the price upward break out the sideways area with high volume. What's that meaning? This is the trend. This is the reversal signal, which means the price will change the demand. If you see the price upward break out the sideways on high volume, which means the price will continue to go up, continue to rise. So here you have another chance to buy again. So if you buy here, you keep it, you can earn good profit for short term. Okay. So let's see this one. Can hold again. Okay. So let's see the trend. Can hold or not? Yes, can hold. But it depends on your buy price. If you buy here, now you hold or not? I cannot tell you. But if you buy around here, now you still can hold. Or if you buy here, you still can keep it. Okay? So we can see here, this is the volume. Just now I told you volume confirm. This is the volume, right? So still can keep it. But we can see next day, if the price continue to go up, but the volume decline, you'd better sell for short term. Okay? So this is the price. So you should know how to do that. Price breakout. So you should know how to confirm this is the reversal signal. Firstly, you can see whether the price upward break out the trend line or break out the sideways or chart pattern or support and resistance. All these are reversal signal. Okay, so this is the reversal signal. Then let's see the market. So we can see here, this is the resistance, right? The first time the price cannot upward break out the resistance, right? So this one cannot upward break out the resistance. So this one cannot upward break out. So last time I teach you one theory. This theory is from gain theory. Okay, what is the gain theory? So if you see here, the first time touch the high point. This is the 1 point. The second point. The third point. How about here? The first one, here is the sell point. Here is the sell point. Here is another sell point. But for the first one, the price, the possibility of breaking out is higher. Okay, so the price will go up like this, will move like this. Okay, And we can see here, this is the next one. 1, 2, 3, 4. 1 and 2 and 3 point is the buy point. How about 4? Fourth point, the price will go down. The possibility is higher of going down. Okay, so this is the theory. So we can see the market. The first one, 1, 2, 3, right? Cannot break out. But for the first one, break out already. So this is the reversal signal. Okay, so you should know how to judge the reversal signal, like break out the trend line, the chart pattern, the sideways, or resistance and the support. All of this we can consider the reversal signal. Okay, so let's continue. How to judge trend by Homely chart? Dow Theory, the main content is about the trend, of judging the trend. So how to judge trend by Homely chart? There are many functions you can choose, like the bull and bear expert. Bull and bear expert, you can follow the band. The red band is the uptrend. The green band is the downtrend. Okay. So if you see the green band turn to the red band, this is tells you that the trend is reversal. So here is the buy point. If you see the red band, which means you still can keep it, no need to sell. So here is the buy price, when to sell. If you buy at this price, you should sell once the green band appears. Okay. So you can use bull and bear expert to judge. But you know this function is suitable for medium term. It's better. Short term. Okay. So you can combine with other functions like if you want to use this function, if you want to catch some short-term buy point, because here is the medium-term buy point. But if you want to buy here, or buy here, you can combine with buy low signal. Okay, what is the buy low signal? So let's click expert, then bull and bear expert, then click buy low signal. Bottom catch signal. So bottom catch signal. Okay, then we can see this one. You can combine some. Let's see this one. So firstly, we confirm that the medium-term trend is good. So if you see the bottom catch signal appears, is the buy point. Okay, it is the buy point. So this is firstly, this one can help us to judge the medium-term trend by bull and bear expert. Okay, so the next one is trend expert. This one is I think is also good because it can help us to judge the medium-term trend and the short-term trend. Okay, so firstly we can see the main line. The main line can judge the main trend, the primary and the secondary trend. If we see the main line is up and purple, which means the trend is good. Okay, the Dow candlestick can help us to judge the mirror trend. If you see the red candlestick, which means the mirror trend is up, the mirror trend is down, mirror trend is up. So how to buy and how to catch the buy point? Firstly, you should check whether the trend is up or not. So this is the uptrend, right? So when you see the green turn to the red candlestick, green turn to the red candlestick, green turn to the red candlestick is the buy point for short term. Okay. So how to do that? If you see the green turn to the red candlestick, at least 3 assistant lines turn to purple. This is the good buy point. So here or here or here also can buy. Okay. So let's click the expert, 8 experts. So where is the good buy point? Here, buy point, right? Here also can buy. Here, buy point. Why? Because the medium-term trend is up. Then, if you see the uptrend, when you see the green turn to the red candlestick, it's the good buy point. Okay? So this is the trend. So let's see this one. This one, where is the good buy point if you use trend expert? So green turn to the red candlestick. At least 3 assistant lines turn to purple because the main trend is down or up. The medium-term trend is still down, right? But here is the short-term buy point because green turn to the red candlestick. At least 3 assistant lines turn to purple. This is the buy point in the downtrend. Okay. So here, if you buy, you can keep it. The buy price is 0.2. 0.2. Okay, so here you can buy again. Here can buy or not? Yes, can buy again. The price is 0.2. Then now you keep it. You can earn some good profit for short term. Okay, so you can use this function to judge the trend. So like Chris Energy, we can see here, green turn to the red candlestick, 0.194. Now you keep it, 0.22. You can make profit, right? But if you use this function, you cannot buy at the lowest point or sell at the highest point. It's not for buy low, sell high, but you can make stable profit. Okay. So this is the trend. So like this one I already told you. You can use Holy Rainbow to judge the trends. It's uptrend or downtrend. Okay. So this one is called homely position. Also can help us to judge the trend. Okay. So you can see the main line is green line. Green line is up. The medium-term trend is up. Okay. So this function is suitable for medium long term, not for short term. Okay. So there are so many indicators, so many trend indicators. So you can use for judging the trend. Okay. Just now, from the beginning, I told you how to do short term by KDJ indicator, right? Like the KDJ J line is between -20 to 20, and the J line upward turning. But how to filter like that? How to filter according this information? So we can click filter. Click logical filter. Change the original indicator to KDJ, but this one is only for short term. Okay. So KDJ we use the J line. J line is -20, right? Then less than 20. And the J line upward turning. Click add. Okay, then we can click filter. So this one is only for short-term rebound. Okay, so let's see this one. This is only for short term. So after you filter, you also need to check which one is better. So let's see this one. First one is this one, but this one is only for short term. Okay. I just teach you how to do that. So this one is also good. So this one is only for short term. Then you can use it to filter some short term rebound. I just teach you this filter method. Okay. So this is the seminar. Then the course main contents. So let's review it. Today we talk about the principle of Dow Theory and the market outlook and basic viewpoint of Dow Theory, and we know how to judge the turning point of STI index by Fibonacci. Okay, so at least till now, the 18 days later, the market will have some turning point. So the monthly chart of STI use KDJ by judge the periodical high and low point, more suitable in monthly chart or weekly chart. So this is the weekly chart and daily chart. Then Dow Theory principles. The price discounts everything. The market has 3 trends. The trends have three phases. The averages must confirm each other. Volume must confirm the trend, and a trend is assumed to be in effect until it has given definite signals that it has reversal. Okay, so this is then we learned how to explain the details of Dow Theory principles, and I hope you can remember. Okay, so this is today's course. So thank you. And you should remember the index first. This is our philosophy. Index first, stock next, long term first, short term next, and operate familiar. I hope you can remember this investment philosophy. Okay. So this is the main content of today's course, and I hope you can understand and try to consume when you're at home. Okay. So this is today's course. Thank you. Which one?